Hey everybody, Chuck Barone. Thursday, March the 30th, 2023. Rolling into the end of the first quarter of 2023 already, man. Wow, is time going by quick. It just seems like time's relentless, man. I can't believe how fast these first 3 months have gone by. All the zaniness that we've dealt with, man, in these crazy markets, inflation and banking failures and crazy politicians and Federal Reserve Board talking heads out there confusing the hell out of everybody with mixed messaging. It's just been a riot, hasn't it? Anyway, before we start the show, as always, welcome everybody to the show. Thank you guys for your support. We appreciate you guys watching the videos and everything you do for us every day. We do. Markets today was a good day for the markets. I think we have this attitude that, the market just seems super resilient. Companies are earning money. So the stock market just rallying like crazy. Again today, the Dow up another 141. S&P up 23. Nice numbers too. S&P over 4,000. Nasdaq over 12,000. You got the S&P the Dow rolling up on 33,000. In spite of everything, the negative stuff we've been reading about, business seems to be going okay. If you're not a small regional bank or a independent mortgage broker, you're doing okay in America right now, I guess. At least according to the stock market. Bonds, basically today, not much. Bond market waiting for data. Tomorrow will be an interesting day. We'll get some inflation data. We'll get consumer spending. We'll get consumer incomes. Some really important stuff tomorrow. Today, not much though. So the bond market basically a flat day. The 10-year sitting at 3.55%. It's down just 1 basis point. The 2-year going the other direction, 4.11%, 4.11%. That's up 3 basis points. So the inversion getting a little bit bigger. This bond market's just been wacky, but these calm days are days to be happy days. We don't want to see this kind of volatility in the bond market because that just tells you the uncertainty there is with everything regarding the economy and everything in the country. So nice quiet day on the bond market every once in a while is a good thing, guys. The dollar today, not a good day for the dollar. Down about 0.5 point on the index, 102.15. I mean, that's still a decent number for the dollar, and there's not really much competition right now for the dollar. There's rumblings about the yuan and, all this different stuff with the petrodollar. We've talked about that on the show a few times, but as it stands right now, dollar's still the champ. And even though it's down on the index and been drifting down, actually, still has a pretty decent number on the index. Precious metals today, gold and silver had good days today. A nice day for gold, up $17.30, sitting at $1,981.90 per ounce. $2,000 gold coming soon, man. And silver up 59 cents today, $23.91, $25 silver coming, man. I mean, these are great numbers for these metals. I think they still have a way to run in this rally. I think there's plenty of money waiting to invest, looking for this dollar to decline a little bit, waiting to invest in gold and silver. So you guys out there that are holding metal, I know it's quite a few of you guys. Me too. Yay, good times for, gold and silver. Oil today, though, man, oil was up today, up $1.34 per barrel, sitting at $74.31 for a barrel of West Texas Intermediate. I don't like these oil prices creeping up because every time they creep up just a little bit, we see that right away at the gas station. When they go down even a lot, we don't tend to see that as much at the gas station, do we? So oil creeping back up towards $75 per barrel. Bitcoin today down small, $428, $27,965. A good price for Bitcoin, holding its own, man. My hat's off to Bitcoin and the resiliency it's showing. I think that, I've been reading, people are pretty bullish on Bitcoin. They see 30,000 coming pretty soon here. Obviously, there's some resistance here. But Nice to see this making a comeback. I know a lot of people are pretty heavily invested in this, not only with their money, but emotionally. And, if this could really work out as an alternative, it would be good for all of us. News you guys need today, kind of a quiet day in the market, not much. Jobs, this is what we were waiting for today, the big news. Jobs coming in a little bit, slower than they thought. Jobless claims creeping up, 198K, up 7,000 from last week's 191K. They were expecting 195. So, this is still a pretty strong number. I don't think that that's enough to really move the unemployment number up. So jobs still hot, just not as hot as they were last week. And I think the market's kind of celebrating this news, looking at corporate earnings, looking at this jobs, looking at the GDP, which came in today too, actually came in at 2.6%, so plus 2.6 for the fourth quarter. Revised down from 2.7%. They thought it was going to come in at 2.7. Decent number for our, United States GDP, a mature economy. Obviously, looks like 22 is going to come in a positive year for U.S. GDP. So this kind of news, giving the market a little bit of belief that the Fed can now pause in raising rates, that things are quieting down. Now we're going to see tomorrow. We're going to get the Fed's big inflation numbers. I saw a little sneak today that said that the core was going to be at 4.4%, which means the top line will probably be around 5 or higher. So not a great number, but still creeping down. This is the PCE or the CPE, whatever the hell Fed index they use. So we'll get that tomorrow. We'll also get consumer incomes and consumer spending, big stuff there. So we're going to get a lot of interesting stuff still to come this week. But the data that came today came with not really anything earth-shattering, pretty much in line with what they expected, but positive enough to get a nice little rally in stocks. I think that, people are feeling like, in spite of the weird stuff we've been dealing with, right? Inflation and, is there a recession and real estate coming down and, all of the weirdness we've been dealing with, banks now failing and, the Federal Reserve in the news every month now, which is just not an unusual thing. Fed people are typically not celebrities, right? So in spite of all this, stock market, the economy chugging right along, man. So I think that people are feeling like, maybe this soft landing or no landing scenario is doable. I got my doubts. I've never really seen that work out very well. I guess anything's possible, but it just seems so weird. Maybe my perspective's a little bit jaded because, being a mortgage broker in Vegas, things have been very, very quiet. And maybe that torques my perspective around a little bit. I try not to let it so much. I don't feel like what's happening here in Vegas is unusual. It's happening all across the country, especially west of the Mississippi. So I don't know. This data not really telling us much today. The job market's still cooking right along. GDP was positive and showed a tenth of a point less than they thought. Well, that's not earth-shattering. That's not going to create a big freak out in the market. So I think that we'll see how the week ends tomorrow. I think if these numbers come in tomorrow as quietly as these numbers today did, you'll probably get a very positive finish to the week. And we'll have more to look forward to next week. We'll see how long the good mood can last, right? Moving on. So what do you guys think? You think this whole banking thing is finished now? You think that, that was it? Silicon Valley Bank was the one, Signature Bank, these are the only ones that were really affected by these conditions? Was it really bad management? I don't know. I think what's going to happen is you're going to see what always happens. The big swallowing up the little. The big bank's going to come in. They're already poaching tons of deposits. I guess I was reading this said the big banks pulled $120 billion in deposits from smalls and regionals in just a couple of days after Silicon Valley Bank tanked. Everybody rushing their money into the too big to fails. But now it looks like the policy more or less is nobody's going to fail, at least as far as they're not going to fail. They're not going to fail their depositors. The FDIC is going to basically give blanket insurance to every deposit at every bank. They haven't said they're not going to, and every indication is they will, because that's what they've done so far, right? So I think they've really started up a little bit of a moral hazard there that could end unpleasantly for them. I think the big banks are drooling at this opportunity here to, just swallow up the competition like always. I think what you're going to start to see here, which should really, we'll see, we're starting to see it already, but you're going to start to see lenders and banks and money markets offering competitive rates. Now they're going to start trying to draw money with higher rates. Obviously, they need to have these deposits. Having real cash is great, right? I think that will be good for people who save money. People who, looking for a place to park some cash without any risk. JP Morgan's at 4.5 on their money market. I think you're going to see 5 very quickly, if not already, on some money markets. So, this is good news. As far as now, I know that, 5% is still less than inflation is right now. But, if you have dollars, and that's what our currency here, right? You're going to get paid in dollars. You're going to put dollars in your bank and pay your bills with dollars. I want to earn money on my dollars then. And if the inflation rate is what it is. If I have my money in a bond market and I'm losing money, that's not as good as making 5% risk-free. If I'm in the stock market and I'm picking stocks wrong or my timing is bad, that's not as good as earning 5% risk-free. So I think that these higher rates are good for savers, and I certainly plan on taking advantage of that. By now on our website, you guys should be able to see this investment thing I'm going to show you guys on there. I invested in Fidelity's S&P 500 index fund. I started with a hypothetical $10,000 or whatever. It's faux money, right? It's just paper trading. 5,000 into stock, into the fund, 5,000 into the money market. Money market's only going to yield 3%. I don't want anybody accusing me of rigging it that way. And I'm going to show you how I can, just by doing some very simple math, beat the S&P 500 with an S&P 500 index fund. So that's going to be an ongoing thing on the website. I'm only going to be updating it once a month. That's it. So it'll be probably around the first of the month or so, starting not April 1st, that's just on Monday. Starting probably on May the 1st will be the first adjustment if there's one to be made. So keep an eye on that. I think you'll find it interesting, the method, because it's typically contrary to what a lot of the market is feeling. That's it for today, guys. It's going to be a short one today. As always, we appreciate your support. We'll be back tomorrow to wrap this week up. Hopefully it'll be wrapping up with a nice big kiss for all of us for the weekend. It's Thursday. We're moving. Man, time's going by quick. Weekend is here. Before you know it, it's April. And now we're into the second quarter. Fascinating times we're living, guys. Have a great evening. We'll be back again tomorrow to wrap this week up. Until then, take care. Thanks.